back for another live video. So today live we are going to be looking on how scalping Volatility 75 index as step by step process. So if you're really interested on scalping Volatility 75 index and the other volatility in the indices, go on and stick around with me up to the end of this live so that you can grab some peace of mind here. And then when it comes to start scalping Vix75 index, you will be knowing exactly what to do. So this strategy of TDS scalping strategy is so amazing and simple. So grab pen and paper. You will be noting down some things, some notes which we are going to be discussing about. So as well, we TDS divers, what we do when we are scalping our Vix75 index, we always start when by doing our market. Why do we need to do the market analysis? We do the market analysis to understand the movements of the market. The market should be making the high highs and higher lows, or the market should be making the lower lows and lower highs. This will help us to know the direction of the market, to understand the overall trend of the market. So always you have to start by doing your top-down analysis. And TDS divers, we scalper in TDS, we always start from high time frame, and that high time frame is our H4. We have only two high time frames which we use when we are doing our top-down analysis, that is H4 and H1. We only use those 2 hours when we are looking the trend of the market, period. After looking the trend of the market, we know that we are bearish or we are bullish. That is enough for us so that we can go to those time frames. In minute 15 and minute 5, we start looking for the pattern, and then we implement our trading style. So let us start by doing our top-down analysis from the higher time frame. We are using derived trading view. Yes, so you come here on H4, and then after coming on H4, we have to look the trend. So this is the trend. Now we can see that the market is making the lower highs here somehow, somewhere. This was a little bit uptrend, and then we can see the market starts making the lower lows and lower highs, which means we are going down. We are still going down. This is H4, because if we can get our counter trend or our trend line and we connect this high, we connect this one, and we connect this one, we can see that overall it is the trend is going down. This is what we need on H4. That is enough. For what we do, we get the upper trend, we duplicate or we clone it, we put it down to confirm a trend channel, so that these trends in higher time frame, they are going to be guiding us so that we don't trade against the trend, which means we keep looking for the sales only until the market comes back and break the previous this is lower high, lower low, lower high, until the market comes and breaks this previous low high, comes back down, and then we get certain confirmations, we start going up. Until that has not formed, we don't need to change our bias. We keep looking for the sales. So we see that the H4, we are going down, and now we do the second thing. We go to H1 to combine these two time frames, H4 and H1. Are they doing the same thing? Are they doing the same thing? That's all what we need in those two high time frames. We are still looking forward. We are still looking here an overall trend in H1. As well, we can see in the overall H1, we have a high here, we have a low, we have a high this side, and this is a low. Also, we are still going down. If you can see that the present market right now, or what we can say that the recent, yes, we don't need to get the whole overall trend from the other side of this, just this trend from here, 1 2 3. then we can see we are going down. Now we are done to know that we are going down. Yes, how the trend it is formed? The trend is formed by making the lower lows and lower highs, or the high highs and high lows. That is the only two ways when are forming the trend. And another trend which is always being formed is what we call a sideways trend. For instance, if you can look around this here, what we call a consolidation. So in this consolidation phase, that is what we call on a ranging phase or a ranging market. You can see that the market does not going anywhere. If we can look very well around this area, that the market was not moving anywhere. We were on a ranging market, the market making the high highs and high lows. At this moment, we don't take buy or take sell. We leave the market until we start getting what? We start getting a trending market like this. When you see that the market is making the high highs and the lower lows and the lower highs. So it's when we implement our strategy, we start going on the same direction with the market. So after doing that, we have to go now. Right now, the charts are telling us we have to look for the sales. The only thing what we have to do if we are looking for the sales, we want to go on minute 15 and minute 5. We need something to do like this. So this is going to be a pullback. When we are on minute 15 now, we have started looking we start looking for the setup. We need minute 15 making the high, makes low here, make a high, make a low. This is what we need to see in minute 15. Are you getting the point? If this is presented in minute 15, the market makes a high, low, high, low, high, low, by which means we need an uptrend in in M5 or M15. Are you getting the point? When that it is happen, is going to be enough for us so that we get our counter trend when we get, by which means if we can see this one, the M15 is going up, this is going to be a pullback in H4. If you can see that this is what I'm trying to say, we need to see that the market is making the high, made a low, made a high, made a low, made a high, which means in H4 this is going to be a pullback. But in our lower time frame, we need this. So this is what we need, which is forming our setup. So let us go back here for our illustration. When we see this, we only get a trend line, and then we connect these lows like this. We raise up the trend line, and then we wait the market to come and break this trend line. So when the market breaks the trend line, we execute. When the price breaks the trend line like this, and the M5 or M15 close below, it is when we execute, and then we take the market down. For example, if you can see around this place here, let me do like this. You see very well. So you can see around this place, if we can get our counter trend, we connect this down, we connect this, and then we will put it up like this. Are you getting the point? Like that. That is what we need. Then now, unfortunately, this is an H1. Just it is an example. Let's say that we are on minute 15. Let me go to minute 15 and I show you something. So yes, this is still loading. This is our trend line. This is our trend line. This is our counter trend in minute in minute 15. So exactly when we get this candle close below of our trend line, it's when we execute. This is going to be our entry point. Exactly when this candle pulls and close below of this trend, and then we execute. When we're executing, after executing, where to put stop loss? We put stop loss above here. This is when we put our stop loss. This is entry type 1. When the market come and break our overall counter trend, you can see it. This is our overall counter trend in minute 15. Also in minute 5, you have to draw it like that. Just one trend line. You wait the market to come and break this in minute 5 or in minute 15, you execute stop loss, you put it above of this structure, so you can write the market down. So that is entry type 1. That is entry type 1. The entry type 2, we look on the left side. Is this a left side or right side? Whatever it is, but we look on this side. Where this side, you can see that we have to find the structure on the left side. Is any structure around this side, even though it is down, even though it is up, then we look this structure here. If we get this structure in minute 15, we get our horizontal line, then we mark from the what, from the wick, like that, sorry, from the body, we put our horizontal line like that. After putting our horizontal line, we go to line chart like that. We see, is that trend line we drew, is it on what, on exactly at the that top, like that? That is what we want. Are you getting the point? So we adjust this horizontal line, we adjust this line in minute 15. We go back to line chart, and then we go to minute 5 to make adjustments, so that this adjustment is going to help us to get what, to get a sniper entry, so yes, like this. So if you can see that here in minute 5, this is our line in in minute 15. This, you can see horizontal line, it is on minute 15. So in minute 5, we go also on line chart like this, then we make adjustment from the minute 15 to minute 5, we put above like that, and then we come back to candlestick. When we get to candlestick, also we mark from this, and then we come to the wick up, there we mark our heart, our line there. Well, which means we have to wait the market comes back to the entire this zone. If the market exactly hits this first point line, we start executing. It comes inside of the zone, you keep executing up to this zone is getting filled. So where to put the stop loss? This last high, it is going to be our what, our stop loss. We put our stop loss some pips above here, so that because the spread, it can what, it can come and hit you. If you put exactly at the wick, we have to leave some space for the what, for the market to breathe. So that is going to be what, our zone or our killer zone. We wait the market to come in that zone exactly, and then we execute. You can see very well that the market came and entered very well to our what, to our kill zone point 1, which we mark it in what, on minute 5 exactly. You what, you execute. No need to confirm anything, we have done everything. Just you use your pending orders around this place, you put your pending orders, then you wait the market to come and mitigate your entries, and then you start selling. You can see this setup, it is the one still which is moving right now. We are still on the same what, on the same thing. So how to catch the continuation? We catch the continuation if you can see around this area. So we have to keep looking. What things we have look about here is what we are going to be to use when we are scaling in, or we are adding another entries. These adds there, the starting. So when we are adding some entries, you can see we have to with something like this, and this is this. When we are scaling in, we have to use M5. We have to wait the market comes. Are you getting the point? It does like this, goes up, and then comes back down. After coming back down, we come back to mitigate our entries around this area, then we get executing, then the market start flowing down. Are you getting the point? When the market flows down, flows down, so we have to wait something here, and it does like this. So the market come again, makes a high. This is going to be happening in minute 5. Oh, hold on a little bit. This adds there just fucking me. add by add. Let me delete and then we'll repeat again. So this is going to be in minute what? In minute 5. We need something this. Now we are talking about scaling in. We have already executed. So this is going to be our first entry with our setup. I'm getting the point. This is minute 15, and then we need it goes up, makes a high, and then come and break this structure here. It can sometimes it can do like this. We made a low here, we made a little high here, and then we come, which means when we break this the recent low, which means this is going to be a change of character. When it changes the character, but which means we are going to be waiting, and then we see what the OBS get broken, and then the market will come back here, maybe like forming like a double top, or it can goes above, and then we get a break of the structure. When the market breaks this structure, we have to look this side. Are you getting going? This is, remember, this is our entry. We look this side. After looking this side, we put our horizontal line, and then we wait the market come, and then mitigate our entries. So now we read the market down. So when we read the market down, when do we scale? So we have to wait in minute 5, start pulling back. The minute 5 is going to start making a high, makes low, makes high, makes low, makes high, makes low. We also wait the same thing, and then the minute 5 comes and break above, and then comes break below. When it breaks below, and then we wait, it comes and we find the same setup which we had around here. It's when we find it here in minute 5, then it comes mitigate us here. There will be like an order block. Are you getting the point? So that they will come and mitigate you. We get what they are executed in, and then we also continuing by doing what? By reading market down. So this is what I'm trying to explain. It is the one which is formed around this area. If you can see it very well, that after executing here now what? Our entry, because our entry was exactly here, you can see it this side. This was what? This was our mitigation after executing, and then we continued down. So we have to wait minute 5 start pulling, making high highs and high lows. When the minute 5 starts pulling, making the high highs and high lows, you can see very well around this place that the market did well. This was a high or low, high, low, high, low, and then we here at around this place is when we changed our character, that area. So that after changing of character at that place, you can see this is what a change of character, and then we break the structure around this area. It's when we break what? It's when we break structure. So after when the market breaks in structure, we have to look left where the momentum starts from, the peak. So we can see that this was what? This was our peak in minute 5. Is this side any zone on the left? Yes, we have a zone. This is our what? Is our zone. We get our what? Our line, we put it there like that. Then the stop loss is going to be above of this structure, and then we leave some pips like that. We put our stop loss around that area. That is going to be our stop loss. So we wait the market to come and hit here our pending orders, and it start going down. You can see the market did the same thing after break of the structure. This is what this is here around here. We can see what we had, what a sign that the market is going to start shifting. This is the change of the character, and then here we have what? We have a break of the structure. Immediately we look left, do we have any zone? If you don't see that we don't have any zone, we take exactly this peak which was here. Are you getting? We take this zone as what? Our sniper entry. So this here, we are just scaling in. We are not catching the first entry. You know, we have already got the setup above here. This was our setup. This is our big setup. Now just we are scaling in. So we are in minute 5. We just scaling in. You can see also after scaling in, then the market came and mitigate us, and then we start moving down very well, very well, very well. You can see that also the same thing get repeated like exactly here, but unfortunately when it was coming up, it was not looking good. You can leave it as well. You have to find a good setup. Now you can see here we made a low, we made a high, we made a low, we made a high, and then we moved up. We can see that here is when we have what? A change of character, and then we break the what? We break the structure at around this area. Is when we break what? Is when we break the structure place. So by which means if we break this structure around this place, so where is going to be our entry point, this is going to be our entry point. We have to wait the market comes back and we see if it comes back what will happen. You can see that the market didn't come back. If you see where this setup started forming and got broken, you can see that here the market reached, when it reached here, the market takes off that, by which means that setup is valid, is not longer working. You keep looking at the pullback, we keep waiting the pullback. Now you can see around here the market made a high, made a low, made a high, made a low, and then here we had a change of character, but we didn't break the structure. You wait until we break the structure. Here it's when we break what we broke the structure. So we look left, is there any zone? Yes, we had any zone here. Unfortunately, if the zone is like very far, you don't take it, you leave. Are you getting point? You take exactly the tops here. So we have this zone here around. Now what you have to do to mark our zone, and then we wait to see this is our stop loss above for some pips, and then we wait to see if the market will come. We are still just trading the continuation. So if you can see this side, you can see that the market came very well and tapped in, and then we'll do what? We rated the market down. Are you getting the point? Yes, it moved very well, and then the TP here was what? Was hit. Do you see? That was a win continuation. You keep looking at the pullback. You can see here the market made a high, made a low, made a high, and then we come what we had here, a change of character. We didn't break the structure. If we don't break the structure, you wait the market to continue forming another setup. You can see we made a high, made a low, we made a high, made a low, we made a high. Now this is what we have here right now. You can see where is the zone. Let me clean up and then we get what? Yes, where is the zone? We keep following the market. Remember, we are still trading the continuation. Where is the zone? Here we see this is our zone. Here we mark it. This is still minute 5. We mark there, we wait them stop loss, some pips above here, and then we wait the market to come, because here we had what? A change of character, and then we break the structure around this area. So we wait the market to come and mitigate us. This is the setup. If you are trading 75, this is the setup what we have right now. If you are watching, you can go on the chart and then you keep waiting for this. So we are waiting to see that the market comes in right now at this area. So when the market comes in, the stop loss is going to be at around 11,0477.6741. That is going to be our stop loss. The entry, put you what? Put you pending orders, sell pending orders at 11,9334.5444. Yes, put you pending orders at that level. So we are waiting the 75 to come very well and then mitigate us at around this place, and then we continue to take the market down. So where is going to be the overall TP? This is going to be our overall TP at exactly this area. Overall TP is going to be at this area, 113789.5121. That is going to be what going to be the last TP. Where is going to be the second TP? Second TP is going to be around here. It's going to be around what? 11,5342.1211. That is going to be our TP2. Let me remove this red line, and then we put the black one so that we can change the color. That is going to be TP2. Let me mark all of them green. So this is green. This is the signal now. If you are good in trading, if you love trading what Vix75, now we have got the setup to continue down. Are you getting the point? So this is what now we are waiting. We wait to see the market comes like this, and then comes like that, and then taps here exactly, and then we bring the market downwards. This is what we are waiting to see. This is what we are waiting to see. Are you getting the point? So why? Because if you can see that here at around this place, the market made a high, made a low, made a high, made a low, and then if we can bring our counter trend, and then we draw it like this, The one who entered with entry type 1, he is already in profit, and then they made what? They hit the last TP. Who is going to enter with what? With entry type 2. So we are still waiting our killer zone to be what? To be tapped in, so that we can do what? So that we can be executing. So this is going to be our level. This, it is going to be our sniper entry. Go to your chart right now and then mark this area. When you mark that area, is going to be our what? Our sniper entry. Stop loss above. Yes. So that is all what we have for today. If you want, let me see someone called good day, please. SL and TP. Yes, SL and TP. SL and TP. I have already what said. These ads, guys, they are just disturbing. I don't know why. Let me remove these ads. Now, who wants the SL and TP? They are here. SL and TP, they're going to be, the stop loss is going to be around 120477.6741. That is the stop loss. Entry point 119334.5444. That is what? That is the entry. And then TP1 is going to be 115342.1211. That is TP1. TP2, the last one, is going to be 113789.5121. Yes. Any question? If you have any question, you can drop down. I'm still here around so that I can answer you. Or if you want, so we analyze any pair of your choice, you can drop it in a comment, and then we also analyze that. Any someone who wants, we analyze Vix75 you can drop in the comments. Drop your comment there. You chat, go in the chat and then put there your question, or put your lovely pair, what you want we to analyze, so that we can analyze it for you. We see your favorite pair. What do you have today? Yes, I think everyone who is on Vix75 index, we have got the setup. So we have to keep waiting until the market comes to our kill zone. Here it's when we execute. No need trust. I getting the point? No need trust. We wait our setup to form, so that we can catch our market like we want. There is no necessary of what, of taking a lot of entries, or maybe the setups which are not having high risk reward ratio. Because if you can see here, this is going to be our setup here, this short, and then the TP around this area is going to be like that. This is our setup. So we have to wait. We see what we will get. How? Hey, we are going to risk 1 and then we make 4. That is going to be the good profit. So let me save this. So guys, that's only what I have for you. I hope we shall meet for the next live. I love you guys. Make sure use risk management, because we always not be right. The market is always right. So you always want to do, you use the risk management, because the game is about staying in a game, not to be in a game and then you be knocked out. We always fight hard and hard to see that we can stay longer in the game. You can make losses. One day, second day, third day, fourth day, you are losing, but you can get only one winning trade, and then it cover all you losses, and then you come back. That's why we always try to work hard to see that we can get a good setups which we make us much profit. Are you getting the point? Which we can make us big profits. So the most problem what we all have traders, and we are still struggling with it, because today we say I have made a loss because I traded like this and this. So tomorrow I will change my trading style, so I do like this. Guys, there is no trading strategy which is going to be guaranteed that is going to be making you 100% profit every single day, that when you execute you will never make a loss. No, that's not there. The game is about what? Money risk management. You lose small so that tomorrow you can come. Tomorrow you can come. So I had been having a problem since I started trading on 2018. When I started trading, the problem was that I was thinking that if I can start trading, I will get a lot of money, and then I will finish all my problem within 2 years, which was so hard for me. And then it was so disturbing. And another challenge what I have been seeing on myself, that is getting overwhelmed. I learned a lot of strategies, I learned everything, and I know much. So you get overwhelmed, you get to be knowing many things in your head. So by the time when you come to execute on the setup like this, you say, I see the trend line breakout, can I enter? I see what, let me wait the setup like this, or maybe there is support and resistance, or I see you see. If so, you are still asking yourself what to do there, because you are knowing many strategies in your head, and then the market is leaving you. Remember, the market, it is about timing. Now, for instance, you can see this setup. We want to execute around this area. Exactly. If you are not on the chart, you can't catch the market around this area. It's very hard. And when it comes, and then you see it have come at your killing zone, and then the market have come with high momentum, you say, oh my god, I will not execute, the market is not going. What is your strategy telling you? What does the strategy, if your strategy telling you execute, just execute. Are you getting the point? Then don't rush to put when you execute, don't rush to put your entries at the break even. So what you have to do, you have to wait when the market, let's say that this was the last low here, and then the market come and mitigates you. When the market came and tapped into your entries, after tapping into your entries, what you have to do, you have to wait it breaks this previous low high. This is the high low, previous high low, which needed you to be mitigated. When the market breaks this low here is when you come at the break even. Because if you after getting mitigated, and then the market reached, for instance, like here, it have not break any structure, but it have just showed you the change of character. You see, it have not started moving towards to your direction. If you rush to put you entry at break even, by which means exactly after seeing the change of character, the market will come back to mitigate this order block around here, and then it can start flowing down, which means if you are already on a break even, you are going to be taken out. So that's little thing what I have for you today, guys. See you to the next live. Peace. Bwana Nyegera.